Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio, we have Coughlin, Chief Commercial Officer, Fintech with Fintech Solutions, to discuss the second quarter Apex Next Investor Outlook and how market participants are trading trends in the market. Connor, it's great to see you as always. Welcome back to Trade Talks.
Great to be here.
What is going on with the Apex study that you did for the second quarter? Any trends that you want to identify?
Yep. So this study, just stepping back quick, Apex is a fintech software company that provides technology across an array of different brokerage needs for over 200 different clients. And we currently custody and clear for over 20 million brokerage accounts. So this report's looking at 7 million of those accounts that are self-directed in nature. And what we're looking to do is differentiate between the different generations and say, are younger generations who are getting easier access to markets trading in different ways than their older cohorts.
As AI continues to gain traction, of course, it's a great day to be here. We have NVIDIA reporting after the close today. How do you observe retail investors responding to this trend?
So AI, and this report in particular is looking at Q2, AI is super interesting, and we actually broke it up into two different buckets. So the first thing we looked at was direct AI companies. These are companies that are writing or producing both software and or hardware within the AI industry. Obviously, those are very hot right now. On the other side of it, though, there's a lot of companies that are indirectly exposed to AI that saw some movement. And so that was also very interesting for us to look into and see how that's going to evolve over time. Within that direct bucket, what we found that was super interesting was that Gen Z was actually less likely to buy into directly exposed names. So if you look at a name like C3 AI or Palantir, it was the older generations that drove a lot of the buying behavior and the younger generations that sat back. On the flip side of that, though, when you look at the indirect bucket, we were looking at United Healthcare in particular, who came out with some announcements that they were going to use AI to drive efficiency in their business. And we saw a big spike out of the Gen Z generation, which will be super interesting to see how that plays out over the long run.
Yeah, it kind of does seem counterintuitive. You would expect it to be the other way around. COVID seems to be back in the headlines. How are investors reacting to that?
So again, not exactly what we expected. When you look at Q2 data, you could easily look at the headlines and say, COVID's kind of done. It's not really affecting stocks anymore. And the reason you might say that is looking at our data, you would see that Moderna's way down, obviously a COVID darling. And cruise line stocks, Royal Caribbean, Norwegian Cruise Line, are way up. But when you actually dig into the data, what we're finding in the last few weeks is that the Norwegian Cruise Line and others are actually still well below where they were pre-COVID. And so that's a little bit of a bump from travel, but they're still heavily affected by the pandemic. Separately, what we're seeing around Moderna is as COVID cases spike back up and they increase projections for COVID vaccine demand through the end of the year, that stock is still heavily dependent around COVID activity.
Yeah, it certainly is. I mean, even just looking at what you can discern from reading, Twitter feeds, it doesn't look like many people are going to jump on that bandwagon again to get. They're highly resistant to getting any more vaccines. How do you believe investors are going to behave in the back half of 2023? Should we get some sort of resurgence of COVID?
Yep. So obviously, if there's a resurgence of COVID, it's going to affect the market. But given how up and down it is, it's really hard to say if people are going to buy in for the long term around some of these same names that saw big spikes the first time. One area in particular where I'm super interested through the end of the year is actually, given it's the summer of the strike, there's so many companies out there right now dealing with large labor unions who are driving hard bargains. As those strikes end and they come to new labor agreements, I'm super interested how across generations we see behavior. Separately, one thing in particular that Apex is doing through the end of the year is we're looking to increase access to fixed income. So historically, Apex over the last decade has been driving around efficiency and better access to equities. Given interest rates continuing to rise and potentially rising further into the rest of the year, there's a lot of demand right now from the retail segment for better access to fixed income, which means liquidity, as well as just the notional price of that fixed income. So we're super excited to bring that into the report in the future.
It's interesting that you bring up labor unions and the strength that they've seen, certainly recently with UPS. What are some potential reactions that you think could happen in certain companies or stocks should they get the agreements that they're looking for, or if talks dissolve?
It's hard to say. Apex, as I said, We're all about providing the software and the technology, not necessarily picking the names. But what we're hoping to see is engagement and reaction from our customer base. We're all about making investing frictionless for all. And so what we want to do is give everybody a voice and help them weigh in through their actions on whether or not they agree with how companies handle the summer of strikes.
All right. Connor, appreciate the insight as always. Thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.